It's about that time of day again. My name is Joseph. It's Monday evening, April the 3rd, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is bearish as it tries to retest a 50 round number tomorrow, but we have a support trend line on the chart that's giving both the bears and the bulls big opportunities in tomorrow's session. The S&P is bullish with a wedge target for tomorrow, right back up at where the day began today. But the most important clue is the recent change in control, which tell us to be looking for a trap tomorrow. Gold is bullish, and its short-term trading range is the most important clue going into Tuesday's session. The euro's bearish, and a resistance trend line overhead will make for an excellent location for the bears to sell high with a target down at the measured move. The FDAX is bearish and trying to retest a triple down target tomorrow, but a recent bullish correction just might be the most important clue for the bears and the bulls in tomorrow's session. Boy, oh boy, we're back in the saddle today after a short break last week with a brand new week, a brand new month, a brand new quarter, and of course, plenty of new trading opportunities setting up for Tuesday's session. I got a great newsletter in store for you guys and gals. I apologize for being away at the end of the week last week. Hope you guys survived the last few days of the month of March, and welcome to a brand new month of April, one of the best times of the year to be alive, right? Spring is in full force going forward. Got a great newsletter tonight. Before we jump in, though, I do want to make sure to remind you, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, it's only a small snippet on the YouTube channel. There's a link in the description of that YouTube video. Follow me, right? Follow that link. Come join me here on the blog at Sideways Markets and watch the full-length version with all 5 markets and all the analysis on the blog. Now, while you're here, go ahead and join the mailing list. I'll send you an email every evening when the newsletter goes live. That way you never miss another newsletter. It'll take you right here to the full-length version every evening, Monday through Thursday. Don't forget to follow me on social. I'm always posting important charts, links, updates throughout the week. Grab those social media channels lower left-hand corner. And don't forget to download today's charts, right? You can have all the charts from tonight's video, have them on your computer, ready to go in tomorrow's session. And please don't forget to grab your free pass. If you're not an advanced member here at School of Trade, you're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. Grab that free pass in the upper right-hand corner and come join me as a guest this week. I also want to remind you, if you're brand new here to the SOT community, make sure you check out the frequently asked questions. And of course, I'm always here to answer your questions every step of the way. So don't be a stranger. I'm standing by. You can always call, email, or use live support if you have any questions along the way. Once again, like I said earlier in the video, I'm sorry to leave you guys hanging last week. Time to take that strategic break from the desk last week. We're back, ready to rock and roll here for the month of April. Let's take a look at the calendar. Now, of course, this is the first full week of the month of April, which means we are looking at the employment number later on this week. We'll talk more about that as we get closer. That won't start really impacting us until about Thursday afternoon. So be aware of that. We also, of course, this first full week of the new second quarter, always expected to be a real volatile, right, opportunity. This morning, of course, got a little bit off to a rough start. We'll take a look at the charts in a moment here. It was a little bit shaky at the beginning of the session today, but you'll see those pretty good charts setting up for this week. But all eyes are focused on that employment number later on this week, and we'll start talking more about that as we go into Thursday's trading session. Before we get there, though, we got to get through Tuesday here. Tomorrow's April the 4th. We have nothing major in the overnight session tonight, so nothing to worry about there if you're trading the afternoon, or should I say the overnight Asian session. Tomorrow, really the only major news that really will be anything for us to worry about will be this international trade report tomorrow at 8:30 a.m. Eastern time. Yeah, we're going to hear from our good friends from the RBA down under at 12:30 a.m. Yeah, we're going to hear from the PMI construction at 4:30 a.m. Eastern time. I don't expect those to be major, needle movers, right, for tomorrow. I do expect, though, the international trade at 8:30 a.m., that big market moving event, right as we open up our trade room tomorrow at 8 o'clock. We'll be watching that as well. A close second place tomorrow, but that factory orders at 10 a.m. It's not a red star event. It's not a market moving event, but it definitely has potential to be. as of course all eyes and ears are on the manufacturing sector here to see how we do coming out of the end of the year last year. So looking good there. Tomorrow, big news at 8:30 a.m. Some minor news there before and afterwards. And don't forget, we'll be in our trade room tomorrow morning executing the plan with all of our advanced members. I look forward to seeing you right along with me. Let's jump right in. We got a lot to cover here tonight. As always, I appreciate you spending your valuable time here with me today. We'll start with crude. We'll go crude, S&P, gold, euro, and we can't forget about the FDAX. Great chart on the FDAX tonight, so make sure you stick around till the end. Crude is bearish and trying to retest today's low, but this rising support trend line is not only making the job more difficult, it's also opening the door for buyers to grab control tomorrow. The sellers only really have two options to avoid this trend line. They can either sell higher up in that battle zone, or they can wait for a break lower below that measured move and look for a trap. We got a pretty important scenario here. We'll play both sides of this in a moment. The buyers, on the other hand, now obviously we're a bear market right now, but the buyers, they got potential here, right? This rising support trend line is going to interrupt a lot of those sellers. But first, the bulls have to see the sellers walk away from this market, and they get a hold of pullback. So sellers walk away, price jumps higher, buyers can hold the pullback, right? And of course, they can hold that pullback. Then they'll go hunting for that target back up to retest today's high, and they get that weekend gap. That weekend gap all the way up there at 50.85, right, that is still left unfilled after they barely missed that gap fill earlier on in today's session. As you can see here right now, day started off a little bit choppy and sloppy. We came in this morning, we had like 37 ticks of range on crude oil, right? What was this, the S&P? The bottom line though is definitely a bit of a sluggish start, right, to a new week, a new month, and a new quarter. And so of course, it didn't take very long though for those bears to take control. They got their bear channel, they've got their measured move. Now, I think that measured move is really one of the most important clues. Guys, we talk about this all the time on the newsletter. We see examples of this almost every day like clockwork in our trade room. When we see a measured move accomplished, what are the two things usually happen? Or one of two things usually happen. One, it goes through the measured move and goes hunting for a bigger, right, triple measured move. Or it corrects higher to what? To attract more sellers, and it revisits that low. So the measured move's a pretty big clue here right now, because as you'll notice, the bears had no problem getting that measured move at 50.15, right? They took their profit, price rises higher, just high enough for more sellers to be attracted into the market. And here you'll notice here, man, oh man, they just sold that high aggressively like they should have, right? Bear market, sell high, very easy to see why they'd be interested. But here's where the record skips, right? Yeah, not close, right? Not enough to get that measured move tested. That might just be the most important piece of information on this chart, because what that is it's a higher low. That higher low now creates a support trend line, and this support trend line is a big confidence killer for the crude sellers. Not only does it kill the confidence for the sellers, but it also now starts to make the buyers get a little bit more interested, right? They start thinking, okay, rising support trend line, bears couldn't retest the low. Maybe we now, right, can turn this market around. With that said, the bears have control. They're going to be the first on our list. They're not going to want to sell into this rising support trend line. The bears will be looking for a chance to sell high and bring it back down. Keep an eye out on that battle zone overhead for that buyer failure, trap high above 50.46, and a move back down. Now, as we go higher, a lot of this has to do with how much room, right? If we just go up like this, just a little guy like that, that's not going to give us very much room, because these bears aren't going to have much incentive to be selling because of that rising support trend line. The best thing you want is a nice, big, strong move up. Strong move up, moving average comes over, buyers can't hold the pullback, and price collapses back down. Initial target will be back at the trend line, and of course, final target is back down to retest that low. Remember, whenever we have a correction in a bear market, the objective is to get back down to the low of day, right? The objective is not to go all the way down to 50, right, or that prior day low. So be realistic in your targets. Now, that's of course if price goes higher. If price goes lower, this is where we have to be careful. We don't want to sell into that measured move. Okay, so just getting a breakout pullback using that trend line, normally I would say that's okay, just get below the darn trend line, right? Use that trend line as an area of resistance. The problem with this is that we don't get through all of the support, right? We still have that measured move. What I'd really like to see us do tomorrow for the sellers is get a strong move down. Don't chase though, because we have that triple measured move waiting. And you know what I always say, right? Whenever we see a strong move, we don't want to chase after that strong move. What do we look for? We look for a little trap high, right? A little trap high, a little shake and bake, right? A little head fake there so we can sell high rather than selling low. Most important thing is, you'll notice how I kind of draw this up, is it needs to be below that measured move. I know, right? There's a little bit of finesse that's going to have to be applied here tomorrow. We want to get in short, but we don't want to sell, right, at that triple measured move. We don't want to sell chasing after that move. We'll look for what we call a fake out breakout pullback, right? It's a strong move down. Don't just sell the pullback there. Look for that little trap up, right? And we can look to sell it back from there. So relatively simple if price goes higher, a little bit more complicated, right? Price goes up, we sell it back down. Price goes down, we sell high, right? We don't want to chase after that. What will be interesting though is if it does poke its head and then can't stay below the measured move, right? Because again, that's not going to give those bears the chance here right now, right, to be selling with confidence. Now, I couldn't just stop there. As you know, this rising support trend line here is giving these buyers a definite window of opportunity. Now, you will definitely see there'll be buyers waiting down here to try to call a bottom, right? We're going to see that. We're going to see buyers down here trying to call a bottom, and as far as I'm concerned, they might be successful. The reality, though, is it's not a reliable trade calling tops and bottoms. If you're anything like me and your goal is to find reliable opportunities, right? You want a little bit of profit every day in the account. Yeah, trying to call tops and bottoms just isn't going to give you that. It's going to be very unreliable. So as the market goes lower, yeah, I'm sure there'll be sellers here failing, and I'm sure buyers will try to be buying into it. Not my favorite way to be trading. As I've said earlier, I'm looking for reliability. So the most important thing right now to be a buyer would be a strong move higher. First thing here, buyers need to show us some strength. More accurately described, it would be the sellers walking away, right? If the bears were to pack up and leave town right now, this market would jump, right? Jump higher. So you really want to be watching how that move goes higher. Now, don't forget, the pullback here, that's where the sellers are going to try to find that buyer failure, right? This is where the buyers have to hold that pullback and they have to go higher here from there, right? So buyers hold that pullback. If they can show us some continued strength, then we know we're looking good here now, right, for a new bull channel, a new measured move, and those buyers are hunting for that gap fill up at that 50.85. Don't let that $50 a barrel area get you too drunk on the big round number. Make sure to remember the plan for tomorrow. And don't forget, we're going to execute this plan tomorrow with all of our advanced members in the trade room. So come out and join us. How about some S&P? Moving forward from the black gold to the E-mini. Yeah, we're bullish on the S&P and trading into a measured move as it tries to complete a wedge target for tomorrow. The bulls took control after the sellers failed to hold the most recent correction. And whenever we have a change in trend, we always look for the trap as the most reliable trading opportunity. Buyers will be looking for opportunities to buy low using prior swings and, of course, using that battle zone below us as well. If price does push higher overnight, you know, it definitely might. The key will be to avoid buying the breakout and stay patient for a fake out breakout pullback with a target up at that wedge tomorrow. Real good example here. Boy, the Bears started off the session here with some serious strength to begin the month of April and the second quarter of the year. But you'll notice, though, the Bears also had a beautiful chance here to sell high. As you can see, they weren't exactly successful with that attempt to sell high, right? In a strong bear market, as we saw.